A lot of people are wondering what's going on with the real estate market. Is it slowing down? Is it still a seller's market? Are there still buyers out there who are looking to buy homes? And what we might expect moving forward for the rest of the year. Well, in today's video, I'm gonna break down what's happened for the first 4 months locally in our Ventura County market, and of course, how this might affect you, whether you're a buyer or a seller. Coming up. Hi, Nathan Jackmon here with the Jackmon Group, intelligently helping you move forward in real estate. Okay, so what's going on with the real estate market? Well, right here I have a bunch of data that I've been looking over to see what's been happening for the last 4 months, and it's pretty interesting. So let's start with inventory in Ventura County. Inventory is up year over year. In fact, this is the first year since 2015 that we've seen an increase in year over year inventory, which is a good sign because we've been well below market equilibrium in terms of inventory for the last few years. And market equilibrium is when home prices increase at the rate of inflation. And typically that happens when the real estate market has a 6-month supply of homes. Right now, the supply of homes in Ventura County is 3.6 months, also known as the absorption rate. This is significantly higher than it's been at the end of April in years past, which is good, but it's still lower than what it needs to be for the real estate market to be in equilibrium. So for those of you unfamiliar with the absorption rate, it's basically the amount of time it would take to sell off all the current inventory if no new inventory was to come to the market. And the way you calculate the absorption rate, no, I'm not even gonna bore you. Who cares? Let's just move on. For the last few years, the absorption rate has stayed between about 2.25 and 4.1. Now, anything below 6 months is typically a seller's market, and anything above 6 months is typically a buyer's market. And like I said before, an absorption rate of 6 months, also known as a 6-month supply of homes, is when the real estate market is most efficient. So if the absorption rate is below 6 months, then there's a shortage of supply of inventory. And this continues to put upward pressure on prices. For instance, if there are 100 qualified buyers to buy homes and there are only 10 homes on the market, prices will rise until more homes become available on the market, or there are less qualified buyers looking for homes. Okay, so now let's talk about interest rates. Interest rates have actually dropped in the first quarter of the year, which is different than the expectation that most people had when it came to interest rates at the beginning of this year. So this, along with the fact that inventory levels have risen and the overall economy looks pretty good, there seems to be more buyer confidence. The Fed has hinted that they will relax on interest rates in the short term, but there still seems to be the belief that higher interest rates are inevitable. Okay, so now let's talk about days on the market. Days on the market is actually up significantly right now than it was a year ago at the same time. So essentially right now houses are taking longer to sell, which is consistent with higher inventory levels, slower price increases, and higher interest rates towards the end of last year. And speaking of prices, prices have increased from last year, but not at the same rate that they did in prior years. So there's definitely been a slowdown in the rate at which homes are increasing right now. Okay, so the part you guys have all been waiting for. What does this mean for buyers, and what does this mean for sellers? For sellers, this means they're probably gonna be able to get a good price for their home and sell it quickly as long as it's priced right and marketed correctly. Right now is actually the best time to sell. And if you wanna know why, check out this video right here or in the description below. Interest rates are low, and the increase in inventory is likely to create more buyer confidence and demand because of it, helping to keep the absorption rate below 6 months this year, which is good for sellers. Now keep in mind, although less inventory is good for sellers, it's not necessarily good for the economy. The economy, for the most part, functions best for everyone if the markets are efficient, including the real estate market. Mainly because when the market is in equilibrium and efficient, more homes are selling and changing ownership, which stimulates the economy. Okay, so now what about for buyers? For buyers, it means that if you buy a home now, prices are likely to continue to increase. And my guess is that at a slower pace than it has in the past few years. And mainly because of lower interest rates, greater consumer confidence in real estate, and a shortage of homes on the market. Basically, buying a home a year from now is probably going to be more expensive. I would, however, try and find good deals if you can, like homes that have sat on the market for a little while, that have had very few offers, and homes that just haven't had that much traffic. Or maybe a fixer that has mainly cosmetic issues, which in turn could limit the buyer pool on that particular home, and you won't have to really compete with that many buyers. Typically, the best time to get these deals is towards the end of summer or early fall, because this is when homes are sitting on the market for the longest. So the best strategy might be to start looking now for a home, knowing that you have until the late summer or fall in case you don't find anything right now that you fall in love with or you really like. Hey, if you have any questions or anything real estate related that you want to know about, please give us a call. We would love to help you whether you're a buyer or a seller. If you found this video helpful, please subscribe. Thanks, and we'll see you in the next video.